right? But we also we got some very positive rare islands, and they're all strange, frankly. And that's why tonight we're going off the charts with the help of Carolyn Boroden. She's a brilliant technician who's teaching at Academy FX, the Stocks and Futures Academy. Normally, I'd also highlight her for an incredibly informative Twitter account, Queen of Fibs, but somehow they suspended her for impersonating herself. Very Kafkaesque, but I hear she's back now. When we asked Boroden if there were any bullish charts, any ones at all, she hesitated. And she says she sees some potential winners. In her view, even the S&P 500 might put in a low later this week, but she did not jump to the conclusion that there's a buy situation. So let me give you some specific examples, and you'll know why I really mean it when I say she doesn't really have a lot of ideas that you want to buy. Because the first one we're going to start with is Twitter. Yeah, because Boroden's broad-minded enough to consider, well, you know what, wait a second, that the chart, even when the company's giving her a headache, could work. Check out the daily chart. Twitter's made a pattern of higher highs and higher lows, which is a textbook sign of strength. At the same time, all the important moving averages that Boroden watches are on the side of the bulls. Twitter's trading above both the 200-day and the 50-day moving simple averages. That's important. She also likes to watch the 5-day exponential moving average and the 13-day exponential moving average when the 5-day crosses above the 13. That's her favorite buy signal, and we've got them all right here. This has every single box checked. More importantly, Twitter recently has held above its key floor report. Based on her Fibonacci methodology, Boroden could easily see the stock running to $53.43 or even $54.87. Sounds like where must they buy it, right? Now, she could even make a case go to 60. Yeah, I'm not buying that one. My caveat with Twitter is that this is all about Elon Musk being dragged kicking and screaming into buying Twitter for $54.20 per share, up $4 from where it is currently trading. I think your upside is capped at that level, and something goes wrong, wow, the stock will plummet through Boroden's support levels in the mid to high 40s, at which point she says you need to go bearish because the bull thesis is toast. I think it's really the chart of a hilarious egomaniac with a plaything and a box of crayons. What was it, Serena? What was that one, Sepia? Remember that day, like those weird ones you didn't understand? Next up, take a look at the daily chart of Valero. Yeah, the big oil refiner. This one's a cleaner story, because we have a shortage of refining capacity in this country. Boroden likes that Valero's trading above its 200-day moving average, plus the 5-day exponential moving average is above the 13-day, meaning the stock, it's a buy. After breaking out above a prior swing higher last month, Valero has now pulled back to a level that's right above a cluster of support. So right here. Remember, Boroden likes to measure the size of past swings in the stock. Then she runs them through the prism of Fibonacci ratios to find key levels where that stock is likely to find support or resistance. With Valero, there's a cluster of floors of support running from 106 to 108, down a few bucks from where it's currently trading. Boroden believes that there's only about 10 points of potential downside if the floor breaks down, meaning it could go to the mid-90s. On the other hand, as long as the floor holds, she can see the stock rallying to 123 with the next stop at 127 and a longer-term price target at nearly 133. Hey, you know what? That is what I call a solid risk-reward for what I think is America's best refiner. Next, take a gander at the chart of Warren Buffett favorite, Occidental Petroleum. Oxy, for short, has become a lot more attractive now that OPEC's actively moving to prop up oil prices. Boroden points out that Occidental recently made a low at a key symmetry support level. The concept of symmetry is a little weird, and a given stock moves in a single direction are often very similar in scale. It's in the same world, this kind of analysis would never work. There's no logical reason why stocks should trade like this. But we don't live in the same world, do we? In reality, you can see these symmetry moves popping up in all charts all the time. Like a lot of things involving technical analysis, you don't need to know why it works. You only need to know that it tends to be surprisingly reliable. With Occidental, the stock had a $19.74 decline back in May and in June, okay? Then it had another decline from late August to September that took it down $19.70. Boroden suspects that move gave us a sustainable bottom. Doesn't hurt that Occidental's lows overlap with two other Fibonacci price retracements that give it a nice floor in the high 50s. The stock then ran to the low 70s. But it's pulled back. It's now down to 64 today. Boroden hopes it pulls back a bit more. She'd be a buyer between $60.56 and $63. One caveat, though. She also wants to wait for the 5-day exponential average to go back above the 13-day. Remember that she's like that each time, meaning her buy trigger has yet to be fulfilled. However, she does expect Occidental to bounce. As long as last month's lows hold, she could see Oxy running all the way to $82 or even $89. On the other hand, if that late September low at 57 is violated, she says you need to throw in the towel. Now, finally, let's talk about something that's really kind of intriguing to me. The broader market. The S&P 500. Right now, Boroden's watching for some crucial Fibonacci timing levels in the S&P. Based on the duration of past swings, she says we've got a group of time cycles coming due from now through.
You guys?
Yeah, absolutely. Maybe kids got horses. Let's take a listen. What's up?
So my question was on the stock Exxon. Like, OPEC has cut down like 2 million barrels per day of production, and gas prices are steadily rising.